Meta Platforms reported quarterly financial results after the markets closed on January 29th, 2025. I'm going to review those results in this video here, and I'm also going to update my buy recommendation of Meta stock. Coming into the quarter, I had Meta rated as a buy. I've had Meta stock rated as a buy for several years now, and I'm happy to see the positive results and the increases in share price that Meta has delivered over recent years. But do I still think the stock is a buy? I'll answer that question by the end of this video. Let's take a look. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, Meta Platforms reported revenues of $48.4 billion in the most recently completed quarter, which ended on December 31st, 2024. That was a 21% increase from the same quarter last year. For the full year in 2024, Meta reported 22% increases in revenue at $164.5 billion, up from $135 billion in the same time the year before. Meta is second place in the world of digital advertising revenue, behind Alphabet and only Alphabet. This is a very lucrative business. The income from operations jumped by 43% in the most recent quarter to $23.3 billion. That was up from $16.3 billion in the same quarter last year. And for the full year in 2024, operating income jumped by 48% to $69.4 billion, up from $46.7 billion in the same time last year. In both the quarterly and annual numbers, the operating profit margin jumped by 7 percentage points to 48% in the most recent quarter and 42% for the full year. A great business that's generating north of 20% revenue growth at operating margins that are now approaching 50%. A very strong business indeed. More impressively, the company's total family daily active people increased to 3.35 billion as of December 2024. That was an increase of 5% year over year. A 5% increase results in over 150 million new daily active users across Meta Platforms' family of apps. The number of advertising impressions delivered across those family of apps increased by 6% and 11% year over year for the fourth quarter and full year 2024, respectively. That means that people are spending more time on the platform, and if they're spending more time on the platform, there's more opportunity to show advertisements. And then the average price per ad also increased. Usually what I notice is when supply increases, the price decreases. But for Meta Platforms, supply increased and the price increased. The average price per ad they were able to command increased by 14% and 10% respectively for the fourth quarter and full year. What that tells me is that Meta Platforms is getting better at selling targeted advertising. The more targeted advertising it can deliver, the more marketers are willing to pay. Marketers want to advertise only to prospects of their business. If that person is not likely to ever be a customer of their business, marketers don't want to show advertising to that person. It's a waste of money, and that business is annoying the customer that is asking themselves, why am I seeing an advertisement for this business that I have absolutely zero interest in buying their products or services? Meta Platforms, ever since the difficulty it had when Apple changed its privacy policy a couple of years ago, which made it harder for Meta Platforms to track your activity across Apple's devices, they've adjusted well and found other ways to deliver more targeted advertising. And that's driving an increase in the price per ad, but also the industry is growing. More and more advertisers are shifting their budgets to digital areas like Meta's apps and taking it away from areas like billboards and physical newspapers and magazines and things that they can't measure, right? How many people saw your advertisement on the billboard? I don't know. Your guess is as good as mine. How many people saw your advertisement in the physical copy of a newspaper? That remains to be seen, right? Or think about people watching cable TV or satellite TV. That's also difficult to measure because of the lack of digital connection and digital connection to the person that's watching it and what they're doing after they watch it. Did they go and then purchase something from your company, or did they purchase something on their phone while they were watching your advertisement? Those are all very difficult to measure. And so more and more of advertising budgets are moving to digital channels, and that's benefiting Meta platforms significantly. The company saying that in the first quarter of 2025, they expect total revenue to increase at about 12% at the midpoint, which would be a considerable slowdown from the 21% they just reported in the fourth quarter. Furthermore, they expect the investments they're making will give them an opportunity to continue to deliver strong revenue growth throughout 2025. That's great to hear. They expect strong revenue growth throughout 2025. I'm taking this to mean double-digit revenue growth for 2025. They also say that they anticipate full year 2025 capital expenditures at about 62.5 billion at the midpoint. They had already pre-announced this number about a week ago. I did a video about how that's great news for NVIDIA stock and an AMD stock because they're spending most of this money on data centers optimized for artificial intelligence, and the GPUs and networking equipment they're buying, a lot of that money is going to NVIDIA and AMD. They also expect the CapEx increase will be driven by investments to support their generative AI investments and the core business. So this is great to hear, especially for, AI stock investors, because of the scare AI investors got from the progress in a Chinese-based company, DeepSeek, which said they were able to deliver AI at a fraction of a cost. There was concerns that companies like Meta Platforms would reduce their budgets and find a way to produce that technology at a similarly lower price point. So far, we're getting confirmation from at least one of the big spenders in the industry that their budget remains on track to be absolutely massive at 62.5 billion for 2025. So that's great news for all the range of AI stocks, including NVIDIA, AMD, Taiwan Semiconductor, and the whole ecosystem surrounding that data center development. All right, so Meta Platform stock is now trading at a forward price to earnings of 24, which I still think is cheap for a company delivering these kinds of results. Double-digit, near 20% revenue growth for the previously completed year, and expecting strong revenue growth in 2025 at operating margins close to 50%. So to answer the question I posed in the headline, do I still think Meta Platform stock is a buy? The answer is yes. I still think the stock is a buy at current prices after I've evaluated the company's earnings results. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.